Hey trader, welcome. This is all about how to create an edge, aka a trading plan. And this is the foundation. Once you've learned and understood some concepts, you need to start putting it into a plan. All right. And this is where a lot of traders go wrong. They watch loads of YouTube videos, strategies, and they just trade everything and anything. And they don't even know if they've got an edge. They don't have a solid plan. If it's based on guesswork and what happens, of course, they get emotional and they lose lots of money. So if you're watching this, you're in the right place. This is what you need to start doing. You need to create edge. You need to know that you've got an edge, create a plan. So you've got structure, something to follow. And it's very, very simple. I know a lot of people think, oh no, this is too complicated. I'll never be able to do it, but it's not the way I do it. And it's all based around this acronym. This is what I need you to remember. CEST. These are the four things you need to understand. So the first C stands for conditions. So what are conditions? Well, what are your main conditions that you have to see before you even enter a trade? The first thing you have to see to even consider it. So it could be maybe you want to see the EMAs aligned, make sure you're in a trend. Maybe you want to see market structure, making them higher highs, higher lows. Maybe you want higher time frame alignment, whatever. That's your main conditions. So when you've got that, then you move on to the second thing, which is E, and this stands for entry. Okay. What's the buy sell engine? What's the trigger to get you into the trade? Is it a candlestick pattern? Is it some sort of lower time frame confirmation? Maybe you're looking for a double bottom on a 1 hour, I don't know, something like that. Or is it as simple as you want to see this indicator cross? The next thing is S, and that stands for stops. And this means where you're going to place your protected stop. And notice I said protected stop as well. I'm going to highlight that. I don't call it a stop loss, all right? I call it a protected stop. And when you say that, it just changes the meaning a little bit. It just reframes what a stop loss is. It's a protective stop loss. So that's just a little thing that I do that maybe you could do as well. Yeah. So anyway, where are you going to put your protective stop? Are you going to put it below market structure? Is it going to be an ATI based? Are you going to base on the volatility? Is it going to go below above an EMA? Just get super clear on that rule. And then the final part of making your edge is targets. And this simply means what is your trade management? Are you just going for a fixed target? Maybe you're going for 2R, 1R, or maybe you're going for a partial and maybe take 50% off at a certain R and then let it run for the bigger move. Or maybe you're just doing a set and forget approach. Maybe you're just going for 1.5 R, set and forget, you walk away. Whatever it is, decide. And that is the formula to create a trading plan, an edge. All right. You've got a template here that you can work with. Okay. You've got something written down, and that's the first stage. So once you've got this, once you've got an idea, then you move on to testing. So what you want to do now is back test it historically. So what I advise is at least 100 trades, at least. The more, the better. The more you test, the more confidence you're going to have, the more data you're going to see. So I'm a big fan of doing big back tests. So I'll make sure you get at least 100. And also what this does is it allows the probabilities to play out. If you've not seen my probabilities video, I'll link it below. Basically, the more trades you take, the more the probabilities play out. It's the law of large numbers. So it's a very important concept to understand. I know it sounds a bit crazy, but it's simple to understand once you watch the video. But it's really important that you understand how trading actually works. So watch that video if you've not. I'll put it down below. But yeah, 100 trades will let the probabilities play out. Now, something I'm also a big fan of is doing lots of years of data. So 10 years of data is a must from any strategy that I test. This way you can see how robust it is, how it works in those outlier events like COVID or the financial crash. You can see how robust it is in them conditions, how it recovers or whatever. With most strategies these days, most people are just trading new strategies that haven't really worked for years. They've only worked for maybe 2 or 3 years, and that's not going to give you any confidence. And it might even stop working. You want a strategy that's always worked, in my opinion. The strategies I trade have worked for hundreds of years. Yeah, that's how robust they are. And that gives me confidence that they're going to work for another 100 years. So that's why I like to do robust testing, 10 years of data. So once you've done that, once you've done your testing, have you got an edge? Great. If you've not, go back to the drawing board and redo that CEST formula until you find something. But from here, what you can also do is look to optimize, improve. So once you've gathered the data, look to see if you can improve anything based on the tests. Can you optimize the risk to reward? So something I like to do is track how far did price go on every trade. And maybe you're going for 2 hour, but you're noticing it's going to 3, 4, 5 hour a lot. Well, this way you can now optimize your risk to reward and get more. Or maybe you could say, oh, it's going to 1 hour 70% of the time, and then it runs to 5 hour. And then, okay, I can have that as a final target. These are the little things you can do. So track how far price goes, test this on different markets now. Let's see if it works well in other markets, create a basket, create a portfolio of markets to trade. Or maybe you've got some ideas now that have come up while you were testing or after that you want to see how it does with that plan. Again, just do the testing again and create something that you like. And then what do you do after that? Once you're really happy with your whole plan, now you just do it in real time. So just like we said with the testing to get to 100 trades, now that's the aim in live. Aim to get to 100 trades. But a little trick we want to do is just review every 20 trades. And this way, it's just big enough to know if the edge is working as it's shown in the back testing. We can compare the data now and say, is this 20 trade sample size exactly what happened in the back testing? Is it similar? Is it totally expected? If so, okay, continue for another 20 trades and another, and just keep reviewing every 20 trades just to make sure everything's normal. And also, what this will do is it will stop you blowing up or trading a strategy that doesn't have an edge. Okay, so it's a little safeguard. And the final thing here is just tweak and refine based on your data and experience. So when you've created your plan and you've done your testing, let's take, for example, the trade management. Maybe you're going for a 2 hour fixed, but now based on experience, it just doesn't feel right or you don't like it. It's just not what you want to do. So now maybe you want to go for 1.5, or maybe you want to go the opposite way. Maybe you're annoyed at seeing price keep going further, and now you want to start thinking about maybe trailing it. So based on experience, on the emotions and things that come up, you can start refining based on that so you can actually trade it consistently. But so that's the process of what I'd advise to do. And yeah, if you do these steps, you'll get to where you want to be eventually. There's no doubt about it. It's just a matter of just putting these steps in and implementing them. Yeah, I hope that helps. And what I'll do, I'll put a little PDF of this down below so you've got something to reference and help you every step of the way. So thanks for watching, guys, and I'll see you soon. Bye-bye.